Good afternoon, everyone, and welcome to the next presentation on the Emerging Trends track. I'd like to thank the organizing committee of the 2020 Virtual IAFCI Annual Conference and the New England chapter for facilitating this important event. I would also like to thank all the attendees for your continued support of the International Association of Financial Crimes Investigators. My name is Dan Spuller, and I am currently the co-chair of the North Carolina Blockchain Initiative. Today's panel will examine how the OCC's approach to crypto will impact broader examination questions and investigative functions for crypto assets and custody. I'm honored to be joined by Hailey, Lennon, and Grovetta Gardineer in this field. And I'd like to have each one of them introduce themselves and share with the attendees a bit about their background and how they became involved in this. So let's start with you, Senior Deputy Comptroller Grovetta Gardineer.
Hi, good afternoon, and thank you, Dan. I really appreciate the opportunity to spend some time with you all today. As you said, I am the Senior Deputy Comptroller for Bank Supervision Policy here at the Office of the Comptroller of the Currency. The OCC is a bank supervisor at the federal level. We supervise national banks and federal thrifts here in the United States. That's approximately 1,300 institutions across the country, ranging in size from small community banks up to the largest, most globally active banks in the world. In my role as the Senior Deputy Comptroller for Bank Supervision Policy, I'm responsible for the development of examination procedures, policy guidance, for those institutions on a range of risk areas. That would include capital, credit, liquidity, market risk, compliance risk, operational risk, as well as the community affairs outreach function that we have here at the agency as well. Those risk areas really do form the foundation of a safe and sound banking system. Each one of those areas is vitally important for a financial institution to understand in order to not only develop its operational platform, but to ensure that it's meeting the needs of its customers on a global, regional, and local scale, and engaging in all activities that it chooses to offer in a safe and sound manner. In particular, today, we're going to be talking about custody activities, something that has been a very long-standing activity that has been safely provided by banks for hundreds of years. So I look forward to the discussion.
Thank you. Thank you. And Hailey, why don't you go ahead and give an introduction to the attendees?
Yes, thank you so much for having me. I'm very honored to be speaking with you all today. My name is Hailey Lennon. I currently serve as a legal consultant for the cryptocurrency space, and I'm also a contributing writer for Forbes, focusing on the regulatory and policy matters affecting the cryptocurrency industry. Before that, I was regulatory counsel for Coinbase, one of the largest cryptocurrency exchanges in the United States. And before that, legal advisor at both Bitflyer, which is a large exchange based out of Tokyo, Japan, as well as Silvergate Bank, which was one of the first crypto-friendly banking institutions in the space. So very passionate about the regulation, was really excited about the news coming from the OCC, and I'm excited to talk about it today.
Thank you. Thank you. Well, I guess to start, Grovetta, would you be able to give us and the listeners for today's webinar an overview of what the Office of the Comptroller of the Currency does? And secondly, what was this recent announcement and how does it affect, how does the OCC ruling affect banks?
So I'd be happy to. As I mentioned a little bit earlier, the OCC supervises approximately 1,300 national banks and federal thrifts across the country in varying asset sizes. The real goal of our organization is to ensure that there is a safe and sound banking system that creates fair access and ensures fair treatment of all of its customers. That's the mission of the agency, and we are able to achieve that by engaging in a series of examinations of the supervised institutions on a regular basis. In our current environment, that is happening off-site, but it continues to happen because we are able to do a lot of our examination activities remotely by virtue of engaging with our insured institutions. In more, we'll call it more normal times, that would involve examiners being on site at institutions, reviewing the numerous policies and procedures that really are the baseline and the foundation of the operating platform of any financial institution. The risk areas, as I said, are quite broad, but they are the same for an institution regardless of its asset size. And they range from capital risk, credit risk, operational risk, market risk, compliance, accounting policy is another area. So all of these form that foundation of the areas that we go in and routinely examine institutions for. The area that is probably most impacted by our recent announcement in giving an interpretive letter that very clearly states that banks can provide custody services for the crypto business really is an operational risk issue. And it probably expands, as you can well imagine, across market as well as compliance and consumer. So every aspect of what a bank does in a capacity of providing custodial services to meet the needs of its customers is going to be what's impacted here. I think the forward-looking aspect of this interpretive letter is incredibly important, but I'll say forward-looking in acknowledging, again, this is a long-standing capacity and ability that a bank has to offer custodial services. The only difference here is that the asset is not a physical asset in the way that banks have traditionally looked at offering that service. So let me give you an example. When many people think about custodial services of a financial institution, they can be done either in a fiduciary capacity or a non-fiduciary capacity. In a non-fiduciary capacity, probably the best example I can give is people taking jewelry to a safe deposit box, putting it there for safekeeping. Clearly the key word here is safekeeping, so that you can rest assured that a valuable asset will not be lost. Engaging in custody services in a fiduciary capacity, the best example I could give you would be to engage in the safekeeping of a security, which might also involve investing, reporting, accounting, those types of activities. Again, something for the safekeeping of that customer. Both of those things are more of the traditional custodial type activities that people associate with an institution. But today, what we know is millions of Americans have a different valuable asset, and it is a cryptocurrency asset. And the safekeeping, if you will, by a bank should extend to a product that many Americans have, value, and want to turn to a traditional relationship in order to safeguard a newer asset. And so I think that's why our announcement with regard to this interpretive letter is so important.
So Hailey, over to you. You served as regulatory counsel for Silvergate Bank, which was the first bank to provide bank accounts to cryptocurrency customers. As you also worked with Coinbase that has an NYDFS trust charter. How does the OCC's news impact the industry as a whole?
Yeah, I think it's huge news. I think that it impacts the industry in a few ways. The first being, like you mentioned, I worked at Silvergate Bank back in 2015. the reason Silvergate Bank has, you know, created such a big name for itself in the cryptocurrency space is traditionally cryptocurrency companies were having a difficult time finding banking relationships because of the perceived and often misunderstood impression that there is more money laundering risks in terms of cryptocurrency. And so with time, more banks have warmed up to the idea of providing just traditional banking services to cryptocurrency companies. So the guidance not only clarified that banks can and should provide bank accounts to any legitimate companies that are in need of a bank account, including cryptocurrency companies, but it also takes that further step of saying that national banks can assist in the custodial services and protecting customers' private keys and crypto assets. And I think that that's a really big step for the industry because, as Grovetta mentioned, there are so many people here in the United States that have cryptocurrencies, and they should be able to turn to national banks that have those safety and soundness practices in place to keep those assets safe. So I was really excited to see the rulemaking and the request for comment from the OCC. So Grovetta, maybe I could turn it back to you in terms of coming from a company like Coinbase that does provide custodial assets. I saw firsthand there are challenges and resources necessary to safely custody crypto assets, as you mentioned, as an intangible asset, slightly different than other items someone might put in a safety deposit box. On the other hand, banks have been doing custodial services for decades. Are there any new technology or compliance challenges you foresee banks will face in deploying cryptocurrency custody capabilities? How do you view that relationship of banks increasing their ability to custody these type of assets?
So that's a great question, Hailey, because the reality is crypto assets are really not held like your traditional assets from a custodial standpoint. And so banks that want to offer that service are really going to have to understand the distinction between a crypto asset and what those crypto custody capabilities are versus the more traditional assets. They have to understand the technology that goes along with this. And they'll need to have the appropriate technology as a foundation in order to make sure they're able to offer this in a safe and sound manner. I think that one example I can give you is the audit trail that is generally, well, it's always necessary in any type of custodial arrangement. An audit trail with regard to crypto assets is going to be significantly different when you think about the blockchain technology that is utilized in order to really track where and who the owners are. And so the bank is going to need to understand and have that type of technology in order to ensure that the audit requirements can be met with a new with this type of custodial arrangement. I think that they'll also need to be quite prepared for any hacking activity that could occur or potential theft because it is a different type of asset being held in a very different way. Those are not showstoppers from my standpoint, but they do have to feed into a decision by a bank on how it will operate and whether or not it makes the decision that it can appropriately manage any risk associated with engaging in this activity and do it in a safe and sound manner. And so there may be additional infrastructure improvements that would have to be made. I think you referenced a couple of minutes ago the need for additional resources, be there human resources or additional technological resources, but the safety and soundness and how this is all going to be administered by an institution is, you know, a foundational question that each institution will have to answer. The technology in this space is evolving extremely quickly. I think that is great for banks to be able to stay on top of this. So, you know, maybe the long response to a really direct question is it's not an impediment. You know, it is an area that banks would need to explore, but this type of new offering, if you will, for, or let me put it this way, the traditional offering of a service for a new type of product uh, will just be a risk management exercise for the institution in the same way that it would be a risk management exercise for any new product that a bank would offer. And that's what we would expect the institutions to engage in, appropriate risk management.
Yeah, I think what you're getting at is what I'm referencing are the additional cybersecurity and compliance and blockchain monitoring type elements that just create a different level of review and safety and soundness that a bank would need to comply with. But as you said, that's not something that the OCC feels a bank would. The OCC believes that a bank would be able to do those things in order to mitigate any increased risk or technological requirements to have that level of safety and soundness.
Yeah, I really believe that at the foundation of that decision making for the bank, what they really need to do in understanding the business and acknowledging that this is very different than safeguarding a physical asset is understanding, for example, how they're held. Is this something that is, it is going to be a hot or cold storage type of a situation? Is this, you're holding the encryption keys. And so it is the key that is that valuable asset that the consumer really wants to safeguard, and how you achieve that in order to mitigate any cyber threats, hacking threats, theft of that valuable asset is going to be a decision by the bank on how they offer that service. But there are a lot of ways that I think they can approach this. Technology, of course, is going to be at the core of how they make that business decision.
So coming from the digital asset and crypto industry, I know Hailey, we're really excited about these new developments. But from a banking and institutional perspective, does custody create unnecessary risks for banks? And what benefits would banks receive from deploying custody capabilities?
So I don't think it creates unnecessary risk. But because we know there are millions of Americans who actually hold cryptocurrencies, it's a risk they're going to have to get on top of and manage, because it is an activity and it's a product that people want. They want the ability to go to the financial institution that has served as a source of safety and soundness and trust. To hold and safeguard whatever that asset is. Is it their cash? Is it their jewels? Their securities? They want to be able to utilize that same relationship to safeguard this asset. The risk, I think, are ones that we will, always address with the bank from a supervisory standpoint, that we expect them to safeguard anything. So, for example, Bank Secrecy Act, anti-money laundering compliance is going to be key for any institution that is engaging in this activity. That is a baseline risk area that every institution needs to have a safe and sound BSA AML platform. Crypto assets are not going to be any different. The bank will need to understand and apply customer due diligence and understand the know your customer requirements that are associated with who is holding this asset. They need to be able to tune their systems so that they are able to follow those transactions and make sure that they are in alignment with the regulatory requirements. that's going to be a solidly first in line compliance issue from my standpoint, and one that I think is going to be incredibly important to any institution that wants to engage in this business. Those risks, banking is a risk business, but because there's risk doesn't mean that risks should be avoided. We believe that risk can be managed with appropriate policies, procedures, internal controls, and appropriate safeguards. The right ones will have to be put in place by national banks and federal thrifts across the country if they choose to engage in this. But they should not be afraid of this because it introduces risk. They are accustomed to managing risk. They just need to understand the business and the asset that they are managing.
So this leads me to my next question, which is the OCC in June of this year issued this advance notice of proposed rulemaking. And what that really is doing is inviting public comment on this proposed rule. Could you go over a little what that process looks like on public comment and what the OCC hopes to get in that process from companies and organizations responding to the proposed rule?
Sure. The rulemaking process can be somewhat daunting, but I tend to think of it as a three-step process, really. And one part of the process is perhaps optional, if you will. The advance notice of proposed rulemaking is really an opportunity for a federal agency, in this case the OCC, to let the public know that we're thinking about engaging in a rulemaking with regard to digital assets. But we need more information. This is a new area. We don't want to go and create a rule that subjects our financial institutions to a set of hard and fast requirements until we fully appreciate and understand all of the intricacies and the details about this particular space. So for an advance notice of proposed rulemaking, what we do is we put out a series of questions and we encourage public engagement to provide that level of information and feedback to us. That informs the process. Make sure that we have varying points of view from all appropriate stakeholders. And we take that information when the ANPR comment period closes, and we review all of those comments. And it really, I think it really instills a sense of engagement with the public because they're telling us exactly what they know to be the practical implications of digital currencies, what has been their experience, what they have studied, what folks like you, Dan, and Hailey can share with us that we may not know. Hopefully we do, but we don't pretend to know everything about every asset and every newer product. And so this ANPR gives the public a chance to really engage with us, inform us as we move to the second step of taking all of that information and then from a much more enlightened and informed perspective, write a rule. Now that rule then would go out for notice and comment also, because it is a notice of proposed rulemaking, which is the second step in the dance. So there's at least another bite at the apple after we put out a notice of proposed rulemaking to get additional comment just to make sure we got it right. So this is our information gathering stage at the ANPR stage.
Thanks for clarifying that. I know a lot of our listeners and a lot of folks in the industry really are following this very closely. So that was very interesting. Hailey, the New York DFS recently announced the idea of a conditional bit license for startups in the space. I know you were one of the firms, or you represented one of the firms that responded to the DFS. Can you touch on that?
Yeah, it was helpful for me to hear Grovetta's thoughts on sort of this comment process, because yes, New York DFS, the New York Department of Financial Services that issues bit licenses in the cryptocurrency space, did announce an idea of a conditional bit license and had a comment period. And I think, reiterating what Grovetta said, I think these comment periods are an opportunity for the industry and people who will be, people and companies that will be impacted by the proposed rule or the proposed conditional license that DFS has put out, to really help regulators to understand if there's any additional clarification that needs to be provided to really make these progressions in regulation impactful and helpful, and really promote the safety and soundness that these, the DFS, the OCC, these regulatory agencies are trying to promote. So I was part of an effort to respond to DFS's conditional bit license. I think that people in the industry, like I said, that will be impacted by these proposed rules do have a bit of a responsibility to be part of the conversation and to make sure that any negative impacts that a regulation might have on the space is fully understood and weighed by the regulatory agency. Because at the end of the day, the OCC is focused on safety and soundness, but they also want to ensure that they're not stifling innovation. There's this balancing act. So yeah, I think especially the cryptocurrency space has a responsibility to interface with regulators, talk with them, and have a sharing of ideas, because that's the only way you create appropriate levels of regulation of this brand new technology. So yeah, I'm grateful for the OCC's opportunity for the industry to provide feedback, and I hope that companies will take advantage of that.
Great, wonderful.
So through our discussions today, we've really been talking about the additional compliance and resources that a bank would actually need to take on in order to really have a safety and soundness program that covers this additional technology aspect of custodial cryptocurrency. I wonder if the OCC has any thoughts on if it makes more sense for a bank to simply partner with an existing crypto custody provider to offer this type of service, as those companies have already worked to develop the technology compliance and human resource elements to maintain a safe custodial practice.
So, it's an interesting question. I think a lot of banks are faced with that. Really, it's every institution's decision whether or not they want to engage in a partnership with an existing custody provider or not. I think one thing is for sure, given the number of people who hold this asset, they can build it, they might buy it, but going into this area is something that I think is a natural progression for powers that have been available to national banks for decades upon decades. If an institution were, however, to want to go into a partnership, the OCC actually does have guidance with regard to third-party relationships and third-party risk management. I think it would be helpful for folks to review that guidance from a national bank perspective or that of a federal thrift, if that was a choice. That activity that you could rely on to be offered by a third party is not a problem for us. And we have said so in the guidance that I'm referencing. I think it's OCC Bulletin 2013-29 for those who want to look it up. And there's a sorted number of FAQs that have been put out since we did that. The most important thing that we expect if there's a bank engaging in a relationship with a third party is that there's appropriate due diligence and understanding about what that third party is actually offering for that bank. That relationship needs to be very clear, needs to be vetted, needs to be understood. Because while the activity can be outsourced. The responsibility for the bank that is engaging with that third party cannot be outsourced. So the responsibility remains with the bank, but those partnerships do exist, and we don't see any issues with that as long as the appropriate risk management, again, is engaged with, and the bank fully understands who that partner is and what they're offering. And if they're offering the product that they are contracting for in a safe and sound manner.
Right. Yeah, that makes a lot of sense, especially given that there are these companies that have developed blockchain analytics tools, or companies that have developed the ability to custody crypto assets already. So that's a great resource for anyone joining us today to reference that additional guidance from the OCC about third-party relationships. So thanks for mentioning that.
Hailey, can I follow up on one thing that you said a few minutes ago that I think bears repeating, and perhaps a little extra exclamation point from the OCC, and that was your reference to the regulatory responsibility in the rulemaking context. And you made a statement that I want to echo, which is the OCC in no way is trying to stifle innovation in this space. In fact, I think the OCC has been a real leader in looking at innovative ways of, banking moving into the 21st century, not putting up obstacles, but making sure that banks remain relevant in offering a wide variety of services in a always advancing, ever-changing landscape that becomes more and more and more engaged in technology. Technologically complex asset outsourcing, complex, looking at complicated things from a banking standpoint is just not new. Believe it or not, I was just a babe in the woods when people were afraid of ATMs. Can you believe it? And that was an innovative new thing, that this machine that would actually take your money without a teller and take a card, give you cash. We are 30, 40 years down the road from that, but the technological advances in the banking and finance space continue to occur. And we want to make sure that banks are able to utilize the traditional, tenets of banking and still meet the needs of their customers. And so in this particular space, when we're talking about crypto custody, it's just another example of the innovations that we think are aligned with the banking powers, such that we want to make sure that we're very clear about our supervisory expectations and in no way stifling the innovation that we expect to continue to occur in this space.
Yeah, thank you for that, Grovetta. That's a great historical comparison too, and thanks for clarifying too. The OCC certainly has been a leader, from my perspective, in the governmental sector in this developing technological frontier. And again, I just want to say the crypto industry, as well as the United States, is clearly fortunate to have you and Acting Comptroller Brian Brooks and others with your background in this position. And before I have some concluding thoughts for you and Hailey, I just wanted to ask another question regarding other regulators. Have you had any dialogue with fellow regulators on creating a comprehensive framework for crypto regulation? Is that something that's your team's working with?
So, we speak with our federal regulatory partners on a regular basis. I can tell you that not a week, sometimes not a day goes by that I don't speak with my colleagues at the other federal banking agencies. We share with them the issuances that we're going to make, our interpretations of guidance in evolving areas, and this one is no different. We were happy to tell them about our interpretive letter that went out that really formed the basis of this discussion today. And I think that as we continue to have those conversations with the other federal agencies, the goal of all of us is to have a safe and sound banking system. The fair access and the fair treatment are fundamental tenets of a safe and sound banking system. And so as we have those conversations, I absolutely believe that we'll continue to share our insights and propel the crypto world forward and how we look at this.
So concluding thoughts, let's start with you, Hailey. Anything you'd like to leave with our listeners today on this industry in the future?
Well, first off, thanks for having me. It's been a great discussion today. I think that it's clear from this discussion that there's some excitement about the space and about the future and where cryptocurrency industry evolves. I have a lot of hope that this technology continues to advance the financial system here in the United States and globally. And really just thank the OCC for their leadership in this statement. And I do, as I said, hope that the industry takes advantage of the opportunity to provide feedback as well. So thanks for having me.
Any final thoughts, Grovetta, from your end?
So again, I want to thank you for the opportunity to chat with you all this afternoon. Always enlightening, and it's always a pleasure to share what we're doing here at the OCC with all interested stakeholders. Speaking of which, please, interested stakeholders, respond to the ANPR. It would be incredibly helpful. And in all candor, any feedback you do have on the interpretive letter and places that we should explore from either a supervisory guidance standpoint or a rulemaking are always important for me, particularly in my role of developing policies, both here and potentially on an interagency basis. I see bright futures for existing powers with new products and new activities. So I think this is where we should be in the 21st century. So again, thank you for that.
Well, thank you. And I want to thank everyone for joining us today. And again, a big thank you to Hailey, Lennon, and to Senior Deputy Comptroller for Bank Supervision Policy, Grovetta Gardineer. It was a pleasure speaking again, and I look forward to collaborating with you in this new and exciting technological frontier. I also want to take a moment to thank the organizing committee for the 2020 virtual IAFCI annual conference and the New England chapter for facilitating this important event. And also to our attendees, thank you for your continued support of the International Association of Financial Crimes Investigators. Thank you very much.